when it comes to investing in, the space of small caps or maybe unlisted space also, is your criteria definitive in terms of, profitable companies only, or you also kind of, take a chance of taking a revenue seeing a revenue, operating revenue, and then kind of, a company is going through a tough phase and you see a turnaround happening. And then obviously, in that kind of phase, you are an early investor and you tend to have a possibility of getting a very high return, or you avoid such opportunities or kind of such ideas.
Yeah, we generally avoid exception. I mean, I don't remember we having investing into a company which is lost. We generally look for highly profitable companies already. I mean, exception has been, the office space place, because there is an accounting thing there, right? You have to look at the operating cash flow. What happens is in an operating in a managed spaces business, the lease liability gets classified, and amortized or capitalized on your balance sheet. It looks as a debt, so it gets capitalized in your balance sheet, and then it gets sort of amortized in your P&L. So there is a big line item, which is mostly an accounting entry. It's not the actual cash flow which is going, because of which a lot of times you'll have a low P&L profits in such companies. But in reality, what you need to do is you look at the rent revenue minus the OPEX cost minus the actual rent outgo, and then you come out with the operating cash flow. So at an operating cash flow level, you will see that they are highly profitable, and there is a huge difference between different companies. So you will see big difference between operating cash flow and the P&L profits when you look at, say, EFC or a Smart Work or an Office or NDCube and even WeWork, right? And it's your job to understand, what is the real cash flow and what is accounting, because accounting is very different in that case. So in that case, you have an exception. You may not see that high profitability at the P&L level, but in reality, these are highly profitable companies in terms of cash flow. So we're okay with that kind of thing. But for most others, where there is no such accounting issue, we are okay with going with highly profitable even at a P&L level beyond the operating cash flow level.